recruitment is the hardest thing that a founder will have to do. And I like to cross all T's and dot all I's. Investors or people want to make money on every decision. Customers are not trying to create trouble for you. They're genuinely confused. Okay, so as you're scaling up, you would end up burning a lot of money, right? AI has been able to solve that problem for us. For things like this, that bridging the gap between what the person wants to do and what the system is capable of doing, it has actually increased the funnel size.
And if not Trendlyne, what would Amber be doing next? So welcome to yet another episode of the FuF Nights. Today we have with us Mr. Amber Pabreja. What you will notice, audience who've been seeing of our sessions, is we've been getting people on board who've been a little under the radar. But trust us, the stories that will unfold from these podcasts are much valuable for anybody who's listening it, seeing it. We'll move forward for the introduction, and I'll have Mr. Amber Pabreja introduce himself. But again, so what we do in our podcast, Amber, is the phenomena that I am personally having when I interview a candidate, and whenever I ask them with the resume in the hand, I'm asking them, tell me more about yourself apart from what I already see on the resume. And 99.9% of the times, they kind of recite the whole resume again, be it of any position. I think that's the difference between a job creator and job seeker. With founders, I've always seen very radical and self-known introduction. So, who is Amber Pabreja? We would like to start off with that. Over to you.
Okay, so Amber is an accidental entrepreneur. Okay, but what I like doing besides Trendlyne is I like watching a lot of TV. Okay, so that's one thing, guilty pleasures. I love food, I love traveling, and I like playing squash. I read a fair bit, and I don't mind Bangalore traffic at all because whenever I'm driving, I'm listening to a podcast. And so I look forward to that, 60 minutes, 70 minutes of driving on a daily basis because it helps me catch up with a lot of non-fiction stuff, which I wouldn't have otherwise got hold of.
Interesting. So that's interesting. I mean, you get to know the person a little more. But let's now dive into exactly what we are doing this podcast for, of getting to know a founder's life, what is going in the entity, how long has the journey been. So just putting in a little intro from my end, and then I will rather go on to it. You're an engineer by profession. You've spent most of your time on the tech side, but then you've jumped to stock markets for some reason. We'll get into it. And you've been running a successful startup, per se, because my success is if it's a sustainable startup, not running just after VC valuations. I've always called it successful startups.
Moderately successful.
Yeah,
Yes. Moderately
successful. I would say if somebody is sustained for 10 years in a startup ecosystem where failure rates are more than 95%, there can't be a bigger success. The valuations don't matter, value creation does. So, Amber, what is the value creation you started off with? What is the product that you've built? Maybe you can just give us a little bit glimpse on it, and we'll deep dive into the whole story.
Sure. So, I mean, I read this story after we started Trendlyne, but I mean, the thought process was the same. So, in a gist, if I were to say, we wanted to democratize information, right? As a retail investor, when I was doing a little bit of investing, I realized that the information gradient between retail investors and the institutional investors was extremely high in India, right? So if you go back, to the Egyptian times, they had these priests, okay, and these priests used to say that the God has told us what the level of the Nile will be this year. Okay.
Wow.
And so the level of the Nile decided what crops needed to be grown and where they needed to be grown. Because Nile is a fickle river.
Yeah.
Okay. And these priests were actually, their soothsaying or their connection with God was an extremely good one. They were able to predict very well what Nile would do that year.
And it happened. I mean, it seems it.
And they were doing a good job, right? And so that's what you see in stock market, right? There are people who seem to be doing a very good job at picking stocks, right?
Yeah.
But what these priests were actually doing was that below their temples, they had these levels, and they had copious data on how the level of Nile on that particular temple's basement was for the past 100 years. And so
Data.
they were just looking at that 100 years worth of data and then predicting what Nile would do that year. Right. And so that is the information gradient, right? So when they were saying they had a connection to God, they had a connection with data.
Data.
Right. And so that's what we came in, and then, we wanted to bridge that gap between institutional investors who could spend $30,000 on a Bloomberg terminal versus people who had a budget of 3,000 rupees a year.
Interesting. But like I said, you come from a very tech oriented. What was the tech that you were doing? Where were you working before? What was the eureka moment where you thought, okay, stock market is something that we have to look at? Which moments defined this journey or inception of this journey?
Yeah, so essentially, see, I was working with Tejas Networks, which was probably one of the first product companies. So I joined them back in 2004 or 5, right? And I was there for maybe 11, 12 years. So over there, I was working with high availability systems and stuff like that. And as far as tech is concerned, I think we were doing a good job. I was working with really good engineers. So the question was whether I wanted to spend the rest of my life writing networking software or, do a lateral shift or to do something of our own. So at that point of time, Devi and I don't have kids, right? So we don't have those many hang-ups about, where you want to be or how much, bank balance you need to keep or whatever, right? And so we decided to try it out for a couple of years, and it worked out. So, and I think I was really into doing stock investing. I actually do much lesser stock investing now than I used to do.
Yeah, because that was my question. Being in tech, you could have built games, dating apps. Why stock market? I mean, back to 2014, I would say, yeah, nobody would have been even thinking about it in India.
Yeah. 2015, 16. So basically, I think many startup founders start off with solving a problem for themselves.
Now you're talking. Yes.
So then I think it was a little bit of that, because I found the problem interesting. I knew so I understood the problem well enough to actually, have a go at it. I really frankly didn't know whether it would work or not. But so, I mean.
So you were a short-term trader or a value investor or the gambler?
Both. I tried my hand at, weapons of mass destruction, futures and options. I tried my hand
Weapons of mass destruction.
at value investing, growth investing.
Yeah.
I tried everything when I was, and it was good because I didn't have very much money to try things with. So if you look at it, I was investing during a time when it was a very interesting period. 2006 is when, the RPL, Reliance Petroleum IPO came, and then there was a big dip, and then 2008 when the Goldman Sachs, all that bank stuff was happening, and there were multiple lower circuits. When was the last time you heard there was a lower circuit? Right, so
I'm afraid there has to be some time. I mean, it's due now.
So I was doing it at that time. So they were interesting times. And
interesting. So you've built a. I mean, we'll go into the product story also, but maybe you've built a Tinder for stocks, left Yes Bank, right Reliance. What exactly is the product?
Yeah, so essentially, if you look at it, it's a bottom-up approach where if you look at the first screen, it tells you 3 scores to durability, valuation, and momentum. The key thing here is that, just like you asked, right, were you in a short-term trader? Were you a value investor? Unlike other, products, everybody has their own style of investing. right? So you can't really associate one score with a stock. That's why we have three: durability, valuation, momentum, and the three of them work very well together. And so from there, it gives you a bird's eye view, and then you go deeper, deeper, deeper. So there are multiple levels to the information, and it's built like, you can go zoom in on one spot, and you can keep on, you know. Doing more and more research in that area, or you can scan through the whole thing and then choose the best stocks. It's like you can go both ways basically.
So more of data control in hand.
Yeah, absolutely.
Yeah, I mean, the more and more I talk to people now, so there's a Hindi saying, "Data ek raam, bhikari sari duniya." So that data has now become data.
Yeah.
So data is like everybody is a beggar to get more data. I mean, in fact, in our field, Reliance launched this 24 rupees ITR. So if there's a backlash, it's all just for the data that is going to come out. So what was the trigger point for you to come out of a corporate world and jump into an entrepreneurship? What was that moment? What triggered you? How did you take that decision? Because most of the times we are looking at three kind of a founders. One fresh out of college, high risk appetite. Two financial freedom folks, 40, 50, seen all side of story, quick builders. And then there is third one who was midlife crisis or say a little bit of corporate experience now, jump kare, na kare. So in your life, how was that decision?
Man,
How
I was just
difficult?
bored. Nothing else. That's why I said an accidental entrepreneur.
Okay.
See, because the kind of jobs that I was doing, I mean, the job I was doing, it wasn't difficult to go back to it, right? So you always have sort of security blanket that you can go back to. So it was more of a, I wanted to try it out, and I think it was the right time in the sense that, the startup culture was picking up in Bangalore, and there were small incubators which were coming up.
So would you say a little bit of corporate exposure gave you a little cushion to take that call? Or it was like you were inclined to become the entrepreneur? Of course, you repeatedly said accidental, but then you still have to take that jump, take that leap, right? I mean,
So I don't see it as a risk. Actually, everybody in my family is an entrepreneur. So my dad was one, my mom is one, my brother
see
is
the DNA there.
yeah. I think all my uncles are entrepreneurs themselves.
So do you feel that DNA helped you take those decisions very fast?
No, I think that's what I'm trying to say. For me, it wasn't that big a deal. I wasn't assessing risk in those terms as
Right.
as you're talking about in the hindsight, basically.
Right. So what you were assessing was solving a problem for yourself,
Exactly.
and that was the trigger
It
point.
sounded like an interesting thing. I had we had the wherewithal to start it. We had the, a security blanket to go back to.
So how did you start? What was your first team member like? Where did you start up? Little bit of that story would be valuable.
So our initial, we were in NASCOM startup warehouse.
Okay.
Okay, so and that's where the first, 5 or 6 employees we hired, and and it was a good thing being there because they have a timeline. They let you be there for about 6-9 months.
Okay.
They don't let you, sit there for
forever.
eternity, kind of a thing, right? And from there, we applied to a bunch of incubators. So we were looking for incubators who wouldn't take a stake in Trendlyne, right? And so we qualified for the Oracle Startup Cloud Accelerator.
Interesting.
And we did about 9 months in NASCOM Startup Warehouse, 9 months in Oracle, and then we were in 91 Springboard.
Okay.
Along with SMPL. So I used to sit very close to Sridhar actually. So that's how we met each other.
Right.
And so yeah, the first employee, Ketan, he was with us for the longest time. And I think Ketan and I built the first prototype.
So you started as a sole founder.
Yes,
Yeah.
absolutely. No, Devi and I started it. So
Okay.
she still takes care of the strategy and marketing
Okay.
and the content side. And I take care of the tech side.
Understood. Got it. So you mentioned 91 Springboard. That's where we are shooting this, and that brings me. So how valuable were these two accelerator programs for you? And then joining question to this is how important was co-working for you? Because time and again, I've always seen community acting as a liver for early stage founders. For what you, how did co-working turn up? You already given an example. We met each other across the table, but apart from that, what were the pros? What were the cons?
So, like in the beginning, so NASCOM was really good, right? Because they organize a lot of talks, and so you have CTOs from Uber coming, they have CTOs from SendGrid coming, and what you really realize sitting over there is uh, you get a chance to figure out, because they make you interact with other startups, whether you're competent enough. Okay, and so that becomes your benchmark, because at least see, I don't know about other people, maybe they are doing it for the second time or the third time, but when you're doing it the first time, you have no benchmarks on how competently you are approaching the problem, right? And so you get a chance to look at the approaches that other people are taking to solve similar problems, or orthogonal problems,
Right.
because all of you are 5 or 6 people, they don't let you stay. If you become more than 6 or 7 people, they ask you to go off, right? So so I think those 9 months were really important for us, and having a nice office is always good for hiring, right? And so in that sense, NASCOM helped us there. And then Oracle, we were housed in the Oracle office, and so that helped us a little bit in hiring the right set of people. So I am a little agnostic to the co-working space.
Okay.
Okay, in the sense that if it suits your budget, then yes, it's an ideal place. But the break even actually between having your own office and a co-working is around anywhere between 15 to 20 people, depending upon whether you're in a WeWork or whether you're in a 91 spot. And so I think you should move out as early as possible, because the moment you have control of your own office. So when we moved out of 91's, we were about 15, 18 people, right? And we were able to take an office with a capacity of 50 people with a similar budget.
Okay.
Okay, we were spending a little more, but we were getting a much more value out of that money. We were able to hire better people. We were able to, get the coffee beans that I'm addicted to coffee.
Yeah.
Okay, so control over the coffee machine.
That is very what.
factory.
Yeah.
Yes, absolutely. So I think, but they obviously bridge a gap between when you're 6 and 7 people and when you're 15, right? So in that sense, if you're that particular, numbers, then yes.
Oh, very interesting, because I've built co-working spaces myself with the co-working teams. And I've always also been in a dilemma of when people ask me advice on go for co-working, have your own office. We've also built our own office. Probably because we have the skill set to manage certain administrative tasks, or say break down bigger problems. Maybe it's easier. But majority folks, when we talk to our people in our portfolio, when we ask them this question, apart from the cost savings, I think they are more concerned about the hassles that come along for the office management.
No, it's not a hassle at all. You hire an agency, they assign a person to you, they take care of it.
So it's about the perception of, for you and me, the problem being it's everyday job. But then most of the founders don't want to get into, they perceive it to be a bigger problem, though it might not be. And hence they kind of pivot towards co-working is better. So you talked about the early team, and you also talked about the co-founder. Now, one phenomena that comes is, who is the best co-founder? A friend or a stranger or a family person or somebody whom you have worked with? So there are a lot of scenarios that are existing in the ecosystem. What is in your case? How it has worked out for you? Maybe a little bit on the co-founding side of the story.
So I think one thing I would say to everyone who, if you're planning to do a startup which is in the technology space, obviously, right? If you're doing something brick and mortar, then it obviously doesn't matter that much. Is to be have a co-founder, either you or the other person, who has to be a tech person. Okay. The first thing is that a tech person will help you understand what can be built and the possibilities of what you can. Right? As a product person, you might not even understand what is possible to be built. And so if somebody in your team, in your early team, is a technology person, and I am not saying that they need to be a coder themselves, but if they're a technology person, then they can guide the product to the right direction so that it becomes a stream. And I think that was really worked out for us because there is a good products person, and GTM, etc. She has done a bunch of stuff around that stuff, and I happen to know technology, and we got a good set of early product people to.
How you met your co-founder?
So Devi and I are married. We met in college. We were friends, and then we
Interesting. Right. So, do you feel that kind of chemistry worked in your startup ecosystem life also, or it was neutral? I mean, at this side of the story, it's more of skill set and nothing to do with the chemistry folks, or it's like no, it actually helps to know the person before.
No, I think we work well, and we have entrepreneurs. So she's done an MBA, and she's worked on the marketing and strategy side here. I work mostly on technology side, so we complement each other's core competencies. But broadly, yeah, I mean, even starting with a friend would have achieved the same goal.
Right. So let's come to the namkaran of your startup, Trendlyne, right? How did you find this word? Because I know I also come from investing background, so I know what trend lines are. But then for you, figuring out this brand name and getting such a simple brand name, because trademarks are always a concern. How was that journey? How were you able to finalize the यार यही करना मतलब इससे अच्छा तो कुछ नाम नहीं मिलेगा.
So it completely depends upon what domain name is available.
Okay.
Like it doesn't, like everything else doesn't really, matter. So Trendline was Devi's Namkaran, and the names which I had come up with were stuff like Finn Babel and Finline.
And board. And what you are lucky.
Yeah.
Somebody found a good brand name for you now.
And so Trendline was by and large, the best sounding one which was available like that then. And that's why it's with the LYNE. One name that I had really liked at that point of time, and it was available only in .co.in, and we were very particular that we wanted it to be a .com. Okay, we were not happy with going with just a .in or a .co.in. And so the restrictions like was actually y-axis. Okay, and incidentally we had bid on
Yaccess.com.
y-axis.
Why would that be? How does that?
It gives you alpha, right? In the chart, the y-axis is where the growth.
Oh yes. Oh, actually yes.
Yes,
Yeah.
right. So in that sense,
Interesting.
and it's a nice name. It's short, right? And so y-axis is a company which helps you get education visas for some reason. Okay. And they came back the bid that we had placed went to GoDaddy, and they came back 2 or 3 years later saying that it's available now if you want to buy it. At that point of time,
No use.
they're already second now.
So do you have the trademark for Trendline?
Yes, we do have a trick.
Never objected.
I don't know what that actually means. I didn't even realize that. I thought you got the trademark or you didn't get the trademark.
I mean, when you apply for it, it's just the application. Then people are right to object. So if somebody had Trendline, LINE, so they can go back and say it's a copy. And then the objection cases go on. Then you have to kind of solve it in some way and get the trademark. But you're saying that you already got such a simple brand name in one go.
Yes. No, it is LYNE. So
Again, I mean, this is still. I'm pretty sure Trendline with a trademark somewhere.
Right.
But if it's got in one go, I think it's a pretty good trademark to have in one go. You have other trademarks also? I mean, how many brand names you own?
The DVM scores is one, right? We have a trademark for that as well. So, and I think we've got a trademark for Starfolio, which is a baskets platform.
What's the Starfolio?
So Starfolio is a baskets platform where you can get an entire portfolio in one shot, right? So the funnel is that you can either buy a RA or a RIA basket. So we have multiple ones, or you can actually create a basket of stocks or a portfolio of stocks using a screener or a watch list Or you can clone, for example, say with one click, you can buy all the stocks that, let's say, Rekha and Rakesh Jhunjhunwala hold, right? Or you can go and say, okay, I'm interested in pharmaceutical stocks, but I don't like Cipla or I don't like Ranbaxy. So you can go click on a mutual fund and replicate that mutual fund and execute it in one shot. Then you can remove Cipla from it if you want.
So who was the first customer? What was the first customer feedbacks like? And how old is that story?
So I think the first customer is me, obviously.
Yeah.
And I have never been in, they call me very critical. So, but yeah, the product is, reasonably good, but it's not the greatest in my opinion. Uh, but it can be much better. So the first feedback, I think tends to be from people who are already, who have formed a relationship with your product.
Yeah.
Uh, so I think the first email that came was regarding, a few nice things that we had, and plus, what should be the next two or three things that they wanted to see in the platform.
Interesting.
So in that sense, there was an interesting thing that a friend suggested. So when we send a newsletter out, typically people send it from no reply at whatever, right? So we don't do that. Okay. We send it from a contact at Trendlyne.com. Okay.
So you get a reward.
So people can reply to it.
Okay.
Okay. And it
And you
is
actually check those replies. Huh?
and there is a team dedicated to replying, collating suggestions, making sure that every query slash bug slash whatever is handled in a streamlined way.
Interesting. So you be your customer and
Absolutely.
hear them out as loud as possible.
Yes.
So you call yourself to be in a B2B segment. So you have B2B customers more or direct customers are more? How's the ratio?
So currently it's about 50-50.
Okay, interesting.
So as far as revenue is concerned, with B2B, we have about 32 odd brokerages who are our customers, and we do about 1 billion APIs monthly calls with them. On the B2C side, we have about maybe about 20 lakh MAU. So I think both of us revenue wise as well as.
So personally speaking, do you like serving dal chawal to one customer or a buffet to 200? Which one is your favorite?
So, B2B SaaS is a real thing. Okay. From a perspective of, let's say, what has happened in the Indian market from October 2024 till now, and things are sort of on a roller coaster, right? The B2B SaaS actually gives you flexibility to do whatever you want. But if you look at the way we have approached it, we have only gone and said, this is the product that we have. Are you interested in? We don't let them govern our roadmap, right? And to a certain extent, we have become good enough because of the feedback of those 20 lakh customers that we are able to build, products, features which a lot of people want. And so we take the successful ones to the B2B customers and say, see, this is the traction. So you don't have to worry about whether this product is going to be a failure. And and the conversation goes nicely with them because they also have a list of, bucket list of their favorites. And we have a graveyard of products and features. So we are able to tell them what has worked, what has not worked. So I think one feeds into each other for us, and that.
But who's more painful out of the two in terms of feedbacks, escalations?
So we run a tight ship. Technology-wise, we are very streamlined. In general, I don't find customers painful.
Okay.
Neither the B2B ones, neither the B2C ones. There are a couple of B2C customers who'll have some random issue, like, they'll say money got charged. They'll forget they did auto renew.
Some noise should always be there. Otherwise,
That's
no?
so. But I don't like engage. There are people to handle it. So there always would be. And in general, right, customers are not trying to create trouble for you. They're genuinely confused. Like they either have ADHD or they forget things and all. It's not. It's fine. I have done it myself.
Very interesting. So let's do a small rapid fire and we'll shift on to a little growth story of Trendlyne. What's the funniest investing myth you have heard so far from someone else?
That astro stocks actually work. So using astrology for stocks is
Actually,
probably the
have you
best.
seen that working or maybe some tukka anytime?
No, I think obviously it doesn't work. Yeah, what it is.
Because these astrologers always predict the recession and downfall. I've always also been waiting for 2-3 years now.
So you know, if you predict a recession, you will eventually get it right.
Get it exactly? Yes, that's a part of the cycle. Sometimes, kabhi to aayega. Sometimes the wheel has to come down. Which stock is the Salman Khan of the market? Always in news, never stable.
Then I'll have to choose between Paytm and I think Ola. So I choose Paytm, I guess, because there's always so much news and actually a lot of people use it, right? And I use it, for example, and I think they've gotten stuck in this regulatory rigmarole. The areas that they work in has a lot of framework issues.
Nice. Now, last one is: would you rather code for 12 hours or rather be in a policy making meeting on the Indian stock market for 2 hours?
No, code for sure. I'm a products person. I'm no investment.
Techie person. Interesting. So I'll go ahead on the trend line story, skip the middle, and then come in the end. You recently expanded to US. What has been that expansion like? Why have you expanded to US? How is the US customer different from the Indian customer?
Primarily, if you see, we are very lucky in India that the data feeds are actually quite cheap. The data feeds are very expensive in US, so you can't really do a startup over there without burning money, right? Because the data feeds cost you money, and most of them are fixed fee, but quite a few of them are based upon the number of customers also. Okay, so as you're scaling up, you would end up burning a lot of money, right? But in India, they're all fixed fee, right? They're not related to the traction you have also, and so in that sense, we were able to get a very stable product. We know what works, what doesn't work, and so the way we built our data engine was always that it could take in any number of feeds. And so we spent about, I think, 4 or 5 months getting the data feed, multiple data feeds integrated for US. So that was always in the vision statement that we needed to do US. So if you look at the data feeds, we have already tied up data feeds for US, UK, and Canada. We're already paying for that. So once US stabilizes, we will launch in for LSC, London Stock Exchange, and for Toronto Stock Exchange for Canada, right? So currently in US we're covering Nasdaq and NYSE. There are a bunch of other exchanges, but we are covering these two primary bigger exchanges. As far as the customer is concerned, the Indian customer is a lot more ADHD. The US customer has had access to a certain level of data from the beginning, right? And they know that they have to pay for data, right? In India, data has been free for the longest time because of money control, because of screen, right? And so we have had to develop sophisticated products and tools which we can actually charge for. In US, you can charge for plain simple data also.
Okay.
Okay. And so in that sense, when we are going to US, what we have realized is that we not only have a very large data mode, but also a very large product mode. And so obviously GTM is playing out over there. But as far as US is concerned, we launched in October last year, already contributes about 20% of our B2C revenue.
Okay.
And the we charge about 3 to 4 times more over there as well. So
And from price point, that market is like even at 3 to 4%, 4 times the pricing, it's acceptable. You get good customer traction.
yes, absolutely. So in that sense, like into four is the the McDonald's index, right?
What's McDonald's index?
If you pay, let's say, $4 for a burger in US, in India you pay $1, so that 4x is what you can charge the customer, a retail customer, because they're used to paying.
Okay.
So there is a certain amount that a person is willing to pay for a fast food burger, right? So and it's a multiple of across the.
So in terms of growth plan from here, what's going to be the India revenue mix and what's your target for export revenue mix or the foreign revenue mix?
It's very interesting. So, the B2C revenue actually grows slower than B2B revenue, right? And but the B2C revenue has the capacity to grow for a longer period of time, right? In this space. Uh, so going forward, we see that after a couple of years, the U.S. market uh, should become around 50%, and then subsequently it will keep on rising. So one example you can look at is Traction, for example, which is a listed company. So I think about 60-70% of their revenue, although it's an Indian company, comes from the EMEA and the US markets.
Got it. And now in terms of, so you start, let's go back again to your day zero to day one journey. You already had a problem statement you were solving for yourself. You started building up the process. When you were hiring, was stock market knowledge required for any candidate, or you were very agnostic that even if somebody doesn't know investing, if they can still be part of Trendline?
No, we still don't require any of our tech people to know. We help them when they join. There is a small, maybe a 4-day course that they have to do.
Right.
But by and large, what always tell them is that, see, if you're integrating a payment gateway, you will read their documentation, right? So similarly, if you're making a stock market feature or a platform, then you just need to learn that feature.
This is join as a teetotaler, but you make them a trader.
Yeah, absolutely. If not a trader, but at least an investor.
When was it when you thought about raising funds? Because Trendline has raised funds in the past. You've got marquee investors on your, of course, that's where I started under the radar founder. But you have marquee investors on the cap table. When was it then that investing was foray to go into for Trendline? How did you look up to the investing horizon? Who were the investors? How did that whole experience shape of the company and what it is today? What role does that people on the cap table do for your company in the journey and today?
So I think they help you a lot in the beginning. So we got through those, an art capital incubator. So we had one angel investor who was interested in investing with us, and they have, taken part in every round. Okay. So they have investments in Volt Money, in Yulu, and stuff like that. So they themselves are, reasonably active in the B2C space. And then Art Capital was a fund which invested in us. And subsequently, I think it was the networking effect from there. IFL actually, we had gone to them for a B2B meeting. We wanted them to take our APIs. We were offering the screener and the superstar API to them. And then Mr. Dange, who was also our first director uh, from their side, suggested that if they were to become the first customer, then they were taking a risk and they would want to stay.
The customer became the investor. Wow. Awesome. Yeah. That's the story. And how has been the journey? It was one myth again, and it's not a myth. People do face struggles. Sometimes not having the right investor on board has its own nuances. But post investment, what changed for you, say, in terms of as a decision maker, as a founder, what things changed as a storyline for Trendline post raising rounds?
So I think the investor comes in only when you have proved your market fit, right? They won't come in otherwise, right? And so a sense of urgency is there once an investor is there, because when you sign the SSHA, they will have horizons, they will have their take on what you should be doing. In our case, we were very lucky because IFL was in this space, and they were not our first customer, they were actually our second B2B customer, but uh, they helped us in the beginning with the product roadmap and guiding us on what to do or not to do. So they've been good to us overall.
No challenges faced in terms of oh, इतना governance कौन करेगा अच्छा
So
खासा?
governance wise, actually, see, Devi and I are very particular about governance ourselves. Okay, and I like to cross all T's and dot all I's, and uh, so in that sense, governance issues wouldn't have happened because we are very particular.
So being on top of compliance governance, do you feel actually helped you raise those funds easier, faster, and the perception was also a little positive?
Yes, I think so, because I was specifically told that they wanted to take a stake in another competitor of ours, but they didn't because they saw governance issues over there, right? And so that competitor was much bigger than us at that point of time. But they actually didn't go through with it because they saw some red flags over there.
Very interesting. So the power of good governance always pays off, even if you're in early stage.
Absolutely.
So I think time and again you've come into a direction where I am kind of perceiving that because you solved it for yourself, it was kind of shaping up pretty well because you had the right problem statement and the right solution because you were solving for yourself. Do you think that was an important factor in this whole journey where things have been kind of not very wavered, but on a linear path? I perceive to be a linear path. It could have been very, and we would love to know if it was up and down. That's the next section of the podcast for us. The outside perception is as compared to other journeys, we found it a little lenient because governance was there in place. But was there ever any time where you had that ECG moments of up down, or oh अब क्या होगा अब तो मतलब let's just think about it कि करना भी है कि नहीं करना and all of those things.
So I think we're very lucky to be in a space where, see, Trendlyne is not a one feature or a one product company.
So diversification.
Yeah, so we are diversified product wise also, right? So we're diversified as far as B2C, B2C, B2B is concerned. We have a baskets product. We now, last month, we have launched futures and options, full-fledged product. So earlier on, we were only towards analytics side, but now we have moved towards transaction side also.
Interesting.
You have the capability to move to US, you have the capability to move to UK. So by and large, if one, lever is not working very well, there are other levers to play with, right? So it's not a one trick pony basically, right? And so in that sense, we are lucky. So if you look at, the moments where you're unsure of yourself is when, so I'll tell you when we were really unsure. So we waited till we had about, close to 1 lakh MAU, right? And so we were doing about 3 lakh, 300K sessions a month. And that's when we opened up our, the premium section, which is, our back testing, alerts, and a suite of features. And over there, when you come in from a non VC space, you would want to think that 1 lakh is a very good number.
Yeah.
Okay, but we didn't realize that was a deposit. it was too small.
Yeah.
Okay, so we now do about 20 times that, right? And that's when it's a sustainable business. Correct. And so at that point of time, the first 6 months were very critical for us because that's when we realized it's going to take us a long time for the B2C to actually give us the revenue that we needed to expand in the way that we want to. And that's where actually B2B helped us. So it bridged the gap for us, and helped us with sustainable revenue. We were very clear though that, the product roadmap was ours. So in that sense, it was worked out very well for both of us.
So none of those moments where you kind of thought Trendline might have a different scenario at that point of time or weaker moments in the journey.
So I mean, the weaker moments would have been okay. Maybe it's not a 20 lakh MAU business; it is only 5 lakh MAU business. So at that point of time,
Define MAU.
MAU is monthly average users. So the difference would have been whether we were a 6 people team who was working and enjoying ourselves, solving problems that we wanted to, or whether we would become a 50-member team. And so the next, the step is now we are a 50-member team. It's a sustainable business. Is it a 250-member team business? And so 5x, 10x.
What do you feel now it is worth? How many member businesses worth Trendline in future? I'm not.
I'm always sort of, I'm not a pessimistic person, and I consider myself to be a realist. So I think 5x, 10x from here, is
Realistic.
Is realistic. I don't know whether 100x is possible,
Yeah.
right? But yes, 10x in another.
No, 10x works. When are you raising your next round?
I don't think we need to raise around ever. So I think we are all set with the.
Interesting. I mean that is the storyline that we actually want to take out because usually startup perception is around unicorns, valuations, And when you hear such stories, you don't need funds, be good for 10x. That's exactly the mindset early stage founders should be resonating. Thank you for bringing that forward. One buzzword that's going around, I don't know if you've integrated that into your business already, is AI and ML. Is that something you've used in your pitch? Or is that something that's coming into your business? How is that transition shaping up? What has changed in the last 2 years for Trendline because of AI and ML?
So ML actually hasn't worked for us, the tensor flows and all. We've tried all that. So typically what you need is about a 67% success rate. Okay. Below that, the strategy or your stock picks, if it is below 67%, it's not profitable for you.
Okay, that's the rule.
So you,
Point here.
yeah. And so AI, however, the LLMs, the way they are working, right? It gives you an opportunity to do a lot of things and build a lot of products, uh, which you otherwise wouldn't have been able to. So 50% of the team currently in Trendline is working on AI projects, and we have a very active roadmap over there. But until recently, matlab, till 2 months back, it was good for only summarization. And so we were using AI LLMs for summarization.
So more reportings and all.
Summarization of transcripts, summarization of annual reports, summarization of very, very long documents. And it was good for only that. So recently we've launched something like a product which is basically you can create a screener. Screener is a filter of stocks.
Yeah.
Using AI. So and Trendline has the largest number of parameters with which you can create screeners, more than 4,500 now. So it's an insane number to manage, right? And so expecting the user to guess what you have and know what you have, even when you've, put it in a PDF or in an Excel or something, is very hard. So AI has been able to solve that problem for us. So now you can go and just type, show me stocks that Buffett would have bought, right? Or you say, show me stocks with high dividends and increasing dividends. See, you don't need to understand what parameters need to be used.
Right.
It'll make the screener for you. You can save it, you can set an alert, and you're done. So, what we have seen is, for things like this, that bridging the gap between what the person wants to do and what the system is capable of doing, it has actually, increased the funnel size for us.
So it's very well integrated in your product offerings from here on, is what we are saying.
So yes, absolutely. I mean, it's already integrated, and we have a very active roadmap on the number of products that we would go.
So since you are in the stock market side, have you come across problems of people asking you in weddings or social functions कि अंबर कौन सा stock खरीदना है, क्या चल रहा है market, and how do you maneuver around them, or do you like चलो ठीक है आ जाओ बात करते हैं, how is that conversation?
So when I was doing my engineering, I went to my nanny's house, my grandmother's house, and so she's understood that oh, abhi he's doing engineering, and so she pointed at the files. ये काम नहीं कर रहा है इसको डिस्क बेटा. So
That's even scary, you know, and
so yeah, I mean, stock picks, I actually don't look at it, on a daily basis from my perspective, but I always guide them to a one particular screener. And now we've got a RA license, so I'll be able to guide them towards a basket. So buying one stock is always too risky, right? You would want to buy a set of stocks together, and that's where the durability, valuation, momentum scores that we have, they work very well together, and I guide them to a particular URL which gives them those guides.
most of the social media we see today is about non-registered, I mean, investment advisors giving investment advice. You are sitting on a data pile of records where everything is available. I'm pretty sure questions around you would always be rotating of what to be done, what not to be done. One question I would personally want to ask you is, you've built it very quietly. I mean, it's in a stealth mode, because we see numbers. All things that we are doing as professional consultants out there is looking at storyline and numbers and resonating whether numbers and storyline make sense. In your case, we know the numbers. The storyline has not been talked about a lot. So is it a conscious active choice of building quietly while others are chasing PR even before anything is done? Why stay under the radar?
So I personally stay under the radar, but Trendline by itself has a very large presence. We do, as I said, about 20 lakh, 25 lakh monthly average users. If you look at any, let's say if you go to Kotak Securities, you go to Fires, you look at their scoring system, you hover on it, it'll say powered by Trendline, right? So as far as the brand visibility is concerned, it's quite a bit, right? What about the brand Amber? That is what individual brand, yeah. So that is actually a slightly a conscious decision, and also probably I'm not. I really don't have the time to actually invest in brand number. I would rather uh, because Trendline is not being built by me, right? It's being built by a team. Thank you highlighting the team. Yes, yes. You so got that out. Yes, it's a team which is building it, and it's not just me. And there are no individual winners over here. As far as it's been largely a team effort, and in that sense, it works very well with me taking a back seat and letting the team do their job. So I'm going to mix a few questions in between because I was taking some notes. We talked about investors, but usually what we've seen from an investor VC base in India is they will expect a hockey stick growth once they are in, especially in terms of top lines, whether you're burning or not doesn't matter. In your case, what was the investor's expectation? What was there on the table? What were you supposed to do once the money came in, and how did it pan out? So we are IFL Fintech Fund is not a standardized VC fund, right? Yeah. It's a they took a strategical like a strategy stake, right? Because we work in a in a space which they understand very well and they like the product, right? So their expectation was very different from a VC expectation, right? So the typical VC would have either they would have asked us to spend all the money in GTN, uh, and if it didn't scale, they wouldn't have cared very much. Right? Uh, so basically, they are looking for a 0-1 outcome. And I said, like, we're moderately successful. We haven't really hit it out of the park, but we're doing extremely well, right? But that definition of extremely well is very different for a VC versus, me as a founder versus, a strategist. Investors, yeah. Yeah, strategical investors. In that sense, we were lucky to find a strategical investor who has let us work at our own growth. The conversation with VCs, right? One, I was talking to somebody recently, and so they were like, "See, our expectation is you should be 10x in 7 years, right?" Uh, and so my take on that was that if you do 50% growth for 6 years, you are at 12x. True. Right. So you don't need to do more than that, right? You don't need to do 200, 300% every year. And then, there are 3 years when you don't do. Exactly. It's better to be consistent. And so if you look at it and you know the numbers because you guys are a part of team over there. So we've kept, very tight 50 to 60% growth, at the top line. But it has been consistent. Yeah, they try to keep it. And so essentially what we are doing over there is that we are not focusing on one single product to be a home run, right? We are fine with multiple levers of growth at the same time, and at some point of time they start compounding and working well together. Mhm. If you would have to explain Trendline to a 3-year-old in one or two sentences, because most of the audience, because we've talked in a way where we've understood everybody's understanding the product. But for, say, you again have to do an elevator pitch, but not to a VC, but to a 5 or a 10-year-old chap. What is Trendline? What is Trendline? Okay, to 5-year-old. I mean, just spit it down in a very simple manner. Okay. Well, let's put it this way, then I'll put it to the child in this way. Right now, your dad, takes care of you. Uh, Trendline is what you need to take care of your dad when he's That's a good one. That's a good one. Very philosophical. It will take some time for them to understand what you just said. Now, in terms of building a startup, especially a profitable startup, you ever felt burnout, or have you ever felt
it's too much. Corporate life was easier, or you thought you've always had that work-life balance. You always had that, never an issue. How has been your personal or professional life along with building this company?
I was my brother stays in Dubai now, so I had gone there, and my sister had joined us in Dubai. She stays in Boston, and so my brother was telling me, I'm taking a back seat. I'm working much lesser, and I'm aiming for the work life balance. And so my sister was like, that's great, very good. And so my nephew was there, and so he was very like gung ho. Oh, it's good. Yes, you should have a work life balance. So I wanted to set the record straight for everybody in the car, right? And so I asked him, so now you're working 60 hours instead of 70, 75 hours. So I said, yeah, I try to do about 60. I don't go beyond that. Okay. And so all three of us are workaholics. My sister, my brother, and I. So even when I was in Tejas, I was working this much. I was happy solving those problems. I'm happy solving this. I, uh, I don't think I ever want to retire. I already have. So, uh, I already know at least three things that I would like to do if I was not doing Trendline.
No, I had that question, but great that you touched
So
upon it. Yeah.
yeah, so I would like to work till I'm able to physically in that place. So in that sense, there's no burnout for me. I just enjoy it. So I do take breaks, and I keep an active lifestyle.
What do you do apart from professional life to keep yourself engaged socially, physically? Any sports that you play?
I
How
play,
frequently you do it?
I play squash. After 40s, I started running because to keep the weight in check. I make sure I play squash twice a week. I read a lot. I have always liked reading. I listen to a lot of music, podcasts since the last.
What genres in music? What do you like to?
Mostly alternative rock.
Okay.
So, but a variety of it. I listen to a lot of music, a lot of podcasts.
So is reading more reflective or the podcast is more reflective?
So it depends. Like reading is mostly fiction.
Mm.
I typically try and so if it's a non-fiction book, then I would do an audible or something.
So there's enough in life. I mean, what we're trying to gauge here is the perception here is, oh, he's given his life to the company.
No, absolutely. I love watching movies. I love TV series, and I don't think I have come across anybody who's watched as many movies as I have, or has watched as many TV.
So despite of doing everything, you can still build profitable startups.
Yes.
So, yeah, absolutely.
I don't have a kid, so I have extra time over.
Any feature that completely flopped, which you wanted to roll out into the market and it was not accepted at all?
Many, I think.
Some, and maybe one or two you would like to say, यार ये तो मेरा dream project था, ये कैसे fail हो गया?
So basically, the holy grail in the investing and the broking industry from the beginning has been something called a stock report. Okay. And so if you look at it, a stock report has always been something which everybody always wanted, right? And so the gold standard was the definitive, stock report, which is this very outdated, sort of very early 2000s looking PDF basically.
What is definitive report?
A Refinitiv is a company now. I think they're owned by the stock exchange. So Thomson Reuters owned Refinitiv, and so they have a stock report which is a 12-pager basically. And so you take that sheet and then you read it and you pretty much know everything about the company. And so everybody wanted us to build it, which we did eventually. We were not very sure as to how it will go, and it has been a massive flop. So the usage over there is extremely low. I mean, it's befuddling basically. I don't know why it has its market.
So everything will not work. Some things will fail.
Yeah.
And how do you cater to those failures? I mean, you keep on building, keep them aside. When do you take a call, बस यार अब इसको रख दो side, अब मत काम करो, इस पे कुछ और बनाते हैं. So sometimes founders get attached to something and they keep on building it without realizing market is not ready for it.
Right.
Now in your case, because you say it's diversification, when is that time where you say this feature has to be chucked out? This is not working.
So yeah, we are like mercenaries, the product team. We don't get attached to a single product or a single feature. we never roll out something which doesn't have uh, a roadmap. So, if it is only a small thing, we don't even call it a product, right? It's a small feature that somebody can do, right? And that's just adding girths to the whole product base. But if you look at what we have done with smart options, right? So we've launched it with a bunch of offerings which nobody else has, right? So it's a futures and options product, right? Uh, and I still call them weapons of mass destruction. And
Yeah,
but
don't tempt me. I'm among that 95%. So don't tempt
so
me again.
so, but we've added a bunch of features. So, for example, there is a risk management module, which uh, helps you make sure that you don't lose too much money.
Interesting.
There is a module which is called a one-click portfolio hedge, right? So you have a portfolio, let's say 40, 50 lakh rupees or 20, 30 lakh rupees, and you don't like what Trump is doing or what the elections are, going to do for you. With a single click, you can say, okay, I'm willing to pay 16,000 rupees premium and there will be no loss in my portfolio for the next 45. And it's one click. So you don't need to understand futures and options. You can, protect.
When
When
did you
you
launch that?
We launched it in the first week of July.
How has been this response? I mean,
Good.
this should be like a hotcake selling right now, you know?
Yes, so it's doing extremely well. So I think as far as what our TAM or addressable market share that we wanted, we've already reached about 33% in a single month.
Wow.
So it's done very well, and in that sense, we already had a little bit of futures and options research buck, and so we were able to guide some of the users over there.
You yourself do future and options?
No, no, not at all. But the way we are building it, it is again, I think the product team and my aim is to reach a place where I am able to do futures and options, or where I like futures to do futures and options.
Okay.
And so we have a very active roadmap over there. But again, we are going to wait till it builds a certain amount of traction, and then we are going to release the next setup.
Personally, I would be very interested on the future and options side, though I've taken an oath not to go in at the HN again, never to use weapons of mass destruction. But I feel because it's all trend line. I mean, if you can analyze trends, if you can have control over your emotions, trading is not a bad option at all. I mean, if you are aware of the stock market nuances, fundamentals, trading can be done in a risk averse manner as well. I don't know what take you have on that, but I believe despite of the 95% loss ratio that say we just introduced, India is still having a very small share of what future and option the West has of derivative exposure. The West has, India still has a very small exposure to derivative. Is that the case?
So yeah, I think in the top five as far as the total exposure is concerned. So I would say that we have a reasonably large exposure as far as the traded volumes are concerned. I don't know, or value is concerned. I don't remember the exact share versus GDP
Yeah.
or whatever. That might be actually pretty small. But yes, so that's been our guiding light for Trendline. Remove the word emotion, those kind of phrases. So if you look at our screening system, our uh, alerting system, backtesting system, that is based upon you first test your hypothesis, and then you just execute your hypothesis after you have proved to yourself. And also, most of the time, you don't have a way to figure out whether what you're doing is actually working or not, right? And so we are very good at that part. So once you have started executing everything via Starfolio, you're actually able to track your performance and benchmark it against a mutual fund or an index and decide whether you're doing a good job or not, right? And that we are doing that with smart options also.
Interesting. So we'll move into the last section of our podcast, and I'll bring in a few insights from our own team. They've asked me to ask you, how are you such a good negotiator, always in control? Do you feel yourself to be in control or every time, and you're able to negotiate all kind of scenarios?
How do you know I'm a good negotiator?
That's my team's feedback. So that is what you have to now respond. I mean, I'm adding two words here: control and negotiation, right? So negotiation is just about value, but controlling a situation is even more what I'm trying to stress here. Be it an investor, be it a consultant, be your team. Do you feel yet you've been able to exercise a little bit of control that is in your favor, balance is in your favor so far? If yes, how do you do it?
Anil, I've been reasonably good. Again, I'm able to dissociate outcomes from what we want to do, right? So you get into a situation where you are a bad negotiator because you care too much about the outcome, right? Or if it matters too much to you, right? So in my particular case, I'm able to sort of take a slightly stoic approach. I sincerely don't know whether I'm a good negotiator. Okay. I'm taking your team's word
Right.
on that compliment and trying to explain it because I have no clue whether I do a good job or not. I think I do reasonably well, but I don't think I'm.
Oh, you answered it because it was not just say from my team because when I related and this questions striked me, I kind of went into other directions also. The team management, investor management, governance management, right? Which is my next point here. Many founders go very in all they are not in control of everything. Something will fall apart at some point of time. It might be falling apart in your case also. But the perception that goes out to an outer world is things are in control. You talked about consistency. You just talked about consistency. That growth should be consistent, not AYL, right? You talked about disassociating with the result. That's an important point. So that's exactly what we wanted to highlight here. These are important points for a founder to reflect on. I mean, if those traits are available, the outer perception is that a founder is in control because there are many whom we can go back and give a constructive feedback because you are not in control of things. So don't give a storyline outside which is not nobody will be able to match it and resonate with your actual numbers. Now, associating another point here is on the governance and compliance side. Again, that is something we've seen very up close. You've been very particular about governance and compliance, and we've seen the earliest of the book closures for Trendlyne. How important is that part? What advice you will want to give to a early stage founder? How can they balance it out? Because the perception out there is legal finance is the low hanging fruit. I want a techie, I want a marketing guy, and finance I can manage. But in your case, you've seen the opposite, where you've been very particular about ensuring things are in order, T's and I's. What kind of advice you will want to give? How can those founders also balance out their expectation and ensure governance is also not a low hanging fruit early on, especially?
Well, I think governance has to be like, why would you want to get into a situation where you don't know what is happening, right? Governance is largely an issue. See, I don't think people do bad governance deliberately. Okay, and I don't think we are talking about that set of
Correct.
people
No.
who are
It's
out
more
to
of ignorance and not deliberate
हाँ,
action.
I don't think it is about ignorance also. It is about uh, not having the right set of skills or not wanting to learn it. But when you are doing a startup and you're an entrepreneur, you need to, come to terms with the fact that even if it is boring, it has to be done, right? And you need to make sure that because eventually the buck stops at you, right? So you need to be on top of it. And you need to make it a priority. I mean, that is your job. So
True.
you're as a CFO or CXO, it is your job to keep everything under you in check and in control.
So, what three mistakes you would kind of want to make early stage founders aware of, which you might also have done? भाई ये तीन चीज़ें मत करना मैंने करके देखा कि for an example hire good and all of that. What three mistakes you will want to highlight that don't do it, they are very common, go past them as early as possible?
So I think the first one would be, if you're entering a crowded space, because most of the founders will enter the crowded space, right? And that's the instinct because that's where the money is easy to raise and stuff like that. So you shouldn't be looking at TAM. You should be looking at the difficulty in getting the TAM, right? And uh, when you are entering a vertical, you need one blockbuster. Okay. You can't do without that one blockbuster product or a feature. So if you want to compete with other people, you will need one blockbuster feature. So, for example, you look at, because the moment you make that blockbuster feature or product, others will be there. It's India, right? They'll be there at your heels within 2 or 3 months. Right. So, for example, Zepto's, whatever entry thing was 15 minutes or whatever, 10 minutes. I don't remember what it was. Right. While Big Basket had been there for a long time. Correct. And so you need one sticky thing which people can't do without. Right. Uh, and the second one would be, you know, not every startup can become a unicorn.
Yeah.
Basically, you have in India, what I think 100 unicorns, 120 unicorns, right? So while you will might eventually get there, there is a very fat, middle of the bell-shaped curve where you'll end up being, right. And it's fine to end up being there. Is what I would like. So although you're striving to be in the, the last standard deviation, most likely you'll be somewhere in the middle. And if you come to terms with it sooner than later, uh, things might turn out to be a little. Manage your expectations, I guess. Third one would be, I think, hire HR, especially for recruitment, earlier than you want. Okay, so we hired a recruitment HR when we were about 18 to 20 people. I think we were 18 people. And I think we should have done it. The HR, the recruitment manager should have been our fourth or fifth hire.
Okay.
Because recruitment is the hardest thing that a founder will have to do. Okay, and it'll eat up a disproportionate amount of your time. And having a person do it for you, or taking 70%, 80% of the load off you from in the beginning, might actually make things much more smoother for you.
So we talked about 3 mistakes for early stage founders. What are the 3 mistakes you find in the Indian retail investor even today? The most common mistake that an Indian retail investor makes.
So that is, I think, straightforward. I mean, I think I have also done it. So should be do cost averaging for the bad stocks that you have in your portfolio. That's the most common mistake. Again, it's because so the idea is that uh, investors or people want to make money uh, on every decision that they make. They don't see their whole portfolio as a single decision, right? And they want to make money off each of the 20 choices that they have made, not realizing that they don't need to do that, right? And so eventually what happens is, if a stock starts falling, they start averaging it out, right? That's one. The other one is the inverse.
Yeah.
When a stock starts doing well,
They
they start doing, they start profit booking,
Right.
right? So they don't let it play out, right? And if you look at Junjunwala or Warren Buffett, all these guys, actually what they did was actually
The opposite of
the opposite of both, right? The third one would be to actually underestimate mutual funds, right? So I think you should always have a certain portion of your money in mutual funds, and you should benchmark your the active portfolio management
versus with them.
versus the MF, and decide whether you're good enough, because many people are good enough to actually beat those returns, but most are not, right? And so in India, especially, the mutual funds tend to a very good job.
We're good investment managers around.
They're-
Okay. What's your investing superpower?
DVM scores. I only invest using one or two screeners. They are all based out of durability valuation metrics.
Did you explain it really?
So basically, we have 3 scores on Trendlyne: durability, valuation, momentum. Durability checks how good or bad a stock is from the fundamental perspective, and it also looks at how good or bad the management of the stock is from a broader perspective. So you have a stock which is fundamentally strong. Durability does not include growth. Okay, in India, growth stocks are already, the price has already factored in the growth. So although we have an internal growth score, we have never exposed it, because in India it doesn't do well, right? So durability specifically on Trendline doesn't include growth. The second one is you have chosen a set of good, fundamentally strong, where the management is good, where the company is doing well. But is it is it in a zone where it's cheap or expensive? Right? Is there a sale on for that particular stock? So it again tells you, out of 100, 100 being good and 0 being the worst, whether it's the right valuation to buy the stock. And the third one is because you have so many stocks in the Indian ecosystem, there will be stories which are playing out in parallel, which nobody is interested in. So you have good stocks which are reasonably valued, but nobody is interested in them. So why would you want to buy that particular stock where you have to sit on it and wait for 2 years before it's tax cleared? And that is why the liquidity is there. It's just that nobody's interested in it, right? The story is not playing out, and so that's where momentum comes in, right? So you choose good stocks which are reasonably priced and where people are interested in it, right? And so combined together, it works very well. And then what it does is that if one of these scores falls down, it automatically goes out of your screener and then you sell it.
Very interesting. One final question I have is what's in store for Trendline? I mean, as a founder, what do you see happening in next 2 years, 5 years for Trendline? And if not Trendline, what would Amber be doing next?
So I think the first $1 million revenue is the hardest. So where we are right now, I think the forecast is extremely good for us, and we have a very good suite of products, and we have multiple, triggers which are firing well. So I'm very optimistic about what's going to happen in the next 4 or 5 years for Trendlyne. What was the second question?
If not Trendline, then what next for you? What all you have in your
So I have two options. I've always wanted uh, to solve a couple of algorithms. So one of them actually recently got solved. So that one is off the bucket list.
which is
It was basically there is a charting problem. I'm trying to simplify it. So there's a charting problem where a graph problem where you have to find an optimal path, uh, which is the lowest cost to traverse all nodes basically. So somewhere was coming. So one is towards that, and the other one would be that I would be always wanting to do something in the technology space, and uh, and also towards a little bit of philanthropy. So one of the things that I might want to do is to build an alumni network, which is specifically catering to fund their alma mater. So if you see the corpus that Harvard has, or MIT has, and all these US institutions have, right, they're able to deliver a quality of higher education and research not because of the students only, but also because they have a large corpus available. So they're able to do much more, right?
research is becoming more important.
Yes. And so if we want to do that, right? So basically, our colleges are, the IITs or the NITs or whatever, right? They're largely funded by the government. And so there are only a certain number of things they're allowed to do because they don't have a budget for it, right? And that's where I feel the alumni network comes in. And so the alumni network can help institutions have a research budget. They can also help, as education is becoming expensive in India. When I finished, when I was doing college in NIT, I think my fees was per semester some 3,000 rupees for 6 months, right? So it was affordable, right? For largely anybody who wanted to do it at that. But I don't think it's that low anymore, right? And so it's becoming expensive, and although loans and all are available, but I think there's a lot can be done to actually help framework at that level. During that period, from let's say 18 to 22, if you can work with students at that time, help them. It also helps retaining, girl children from doing STEM courses. And when I am saying alumni, I'm not talking about only NITs or IITs, not only technology or STEM, but also from a perspective of finance, Stephens, Hindu. You know, the alumni actually achieve a lot of. If all these colleges have probably many billionaires or multimillionaires in their alumni network, and we always have a you know college is soft focus, so it should be easy to funnel that money back so that it does good.
Yeah,
So probably
that's
somewhere.
a brilliant thought process, I would say, and I can see that happening. Like Jack Ma used to say, not Jack Ma, Masayoshi Son, the SoftBank, the investor. So he came and when the India launched that Startup India policy, he was asked on the stage, "What do you see in a founder?" He said, "I look in the eyes." So now I know what he was saying. He was saying, "I look in there." I can see that idea already shaping up. So I think I've known you for almost 8-10 years, but this 1 hour has given a lot more insights than those 10 years so far. Thank you for doing this. I hope we've added some value for the ecosystem. Looking forward to more such conversations. Thank you for joining us.
Thank you for listening.